What's up, traders? Just going to do a quick breakdown on ticker symbol MULN for Mullen Automotive. On this side, we have the daily time frame and the hourly time frame, and over here is the 5-minute time frame. Kicking things off on the daily first, we'll do a top-down analysis. We clearly got rejected off of these highs around 60 cents today, and you'll notice we've got a pretty clear gap in the chart on the daily perspective in between 45 cents and down towards 38 cents. We're not going to use those fractions of a penny, but this gap does seem like it may want to fill if we crack the 2-day lows here, so that should be on your radar as at least a reasonable possibility from the daily time frame analysis. Now, we are getting a little bit of an upswing here, so the momentum is to the upside. However, gaps do tend to fill, and this is in a longer term downtrend. You can clearly see that over time, the stock has been trending lower as opposed to higher. So even though there's a little bit of a momentum pop here, I wouldn't be surprised to see the 2-day lows break. You can see that here on the hourly chart underneath 45 cents to close the gap to 38 cents. Now, when and if we get to 38 cents, you can watch out for the gap fill reversal, right? And what that would be a repair of the structure here. Buyers step up at the prior breakout level to quote-unquote defend their positions, and then we move higher off of that 38, turning prior resistance into newfound support for a higher low here on the hourly as well as the daily to do something that possibly looks like this. Now, that's not a guarantee because remember, the daily trend is firmly in the downward direction. What else can we learn about the 5-minute chart? If we just look at the intraday activity from today's session, the broad market was really taking off to the upside. The S&P 500 closed the day nice and positive. So to see Mullen actually breaking down here is not really all that inspiring. Notice that we got pure price acceptance on the lows after a morning drive to the downside. The bear flag did materialize and we closed sideways in this lower range as opposed to popping back higher into some of the upper range from in here. The only reason we're sort of looking at that as an analysis is to just confirm that yes, the sellers did step up and kept prices lower instead of failing and allowing buyers to bring prices higher. So to me, the primary objectives of these charts and Mullen overall should be to close the gap underneath us, and then we'll reevaluate when and if we get to 38, right? So underneath 45, I would not be looking for any longs through this area of gap in the chart. I would be patient until 38 and reevaluate when and if we get there. Now, if 38 doesn't hold at all for support, there's one last line in the sand, which is right here around 31 cents. You can see that right here coming from hourly support. If we zoom in on this section of the chart, we'll just actually go full screen mode here on the hourly. We'll scrunch this up so you can see it nicely. Bull flag, right? Where do we hold for support here before the gap up? It's all at that 31 cent mark, which is why it's a line in the sand. If we breach this level, then now everybody who is chasing this momentum move to the upside is overhead supply. I would expect the daily downtrend to resume if we crack 31 on the downside. So just to recap, we'll do it one more time. This is what we're watching for in Mullen. If we stay above 45, watch for sideways consolidation. The next momentum leg higher is obviously up and over 60 cents. If we break down underneath 45 cents, watch for a possible gap fill reversal off of 38. If 38 breaks, your last line in the sand is here around 31. If that goes, kiss it goodbye. I would not want anything to do with Mullen underneath 31 cents. Now, the last question you may be asking is what would be an upside target if we just see massive momentum continuation to the upside? Let's look left on the daily time frame chart, and a level that stands out to me would be right here around 77 cents. Reason being, it was prior support that then turned into resistance, and resistance right here once broken. So a fundamental part of technical analysis, when support is broken, it tends to offer resistance, and that's exactly what happened around 77 cents. So that would be my upside target if we get continuation in the first place. But please remember the objectives we've discussed so far. Primary is sideways, secondary is a gap fill reversal underneath. Gotta hold 31, and if we do happen to break 60, watch out for 77 cents overhead. That's going to wrap it up on Mullen. Please check out the main channel for all of our core content, and with that being said, I wish you a green trading week.